Hi, I am investing is common sense. I am going to discuss with you about Petronas Chemical Group, especially the investment of 10 billion ringgit in Perstorp in 2022. The result of the investment could be futile based on financial statement analysis of historical data. However, history is not an indicative of future performance. Let's see how Petronas Chemical Groups manage this company in the future. Petronas Chemical Group was listed in November 2010. It is the leader of integrated gas-based chemical producer in Malaysia and one of the largest in Southeast Asia with the production capacity of 15.4 million tonnes per annum. It is one of the largest methanol, urea, low-density polyethylene, and methyl terbutyl ether producers in Southeast Asia. On 15 October 2023, the company was the third largest company after Maybank and Public Bank in Malaysia with the market capitalization of 59.8 billion ringgit. Petroleum National Berhad is the largest shareholder with 64.35% of shares in the company. Petroleum National Berhad was ranked 216 in 2022 Fortune Global 500 with the total assets of approximately 680 billion ringgit. Petronas Chemical Group biggest market is Malaysia that accounted for 30.3% in 2022, followed by Thailand 12.7%, China 11.5%, Indonesia 10.6%, and the rest of the world 34.9%. The strategic locations of production facilities enable the more efficient distribution of products to overseas markets. Petronas Chemical Group can deliver the products to Thailand within 3 days, China within 6 days, Indonesia within 4 days, compared to the competitors in Middle East and United States who spend more time for shipping due to smaller ships and higher frequency. The feedstock used by Petronas Chemical Group are methane, ethane, propane, butane, and naphtha to produce the products like methanol, ammonia, urea, ethylene, propylene, benzene, animal nutrition, and silicones. 70% of our belongings are derived from petrochemicals. For example, fertilizers used to grow plants, credit card, hair wax, electronic equipment like laptop, toothpaste, all contain petrochemicals elements. Petronas Chemicals Berhad venture into specialties business to better hedge against market volatilities and less reliant on gas-related feedstock. In 2022, Petronas Chemicals Group acquired Perstorp Group, a niche specialty chemical player for resins and coatings, engineered foods, animal nutrition, and advanced materials. A leading sustainability-driven global specialty chemicals company that enables Petronas Chemicals Group to move to the next growth journey in specialty area. Perstorp Group was purchased at the equity value of 1.538 billion euro with the price-earning ratio of 16 based on financial year 2021 net income of 95.65 million euro using internally generated funds. In addition to that, Petronas Chemical Group was required to pay all the existing net debt of 762 million euro. Therefore, if we added equity value of 1.538 billion euro and net debt of 762 million euro. The amount paid by Petronas for the acquisition of Perstorp was 2.3 billion euro, which represented enterprise multiple of 8.25 based on the Perstorp Group during 12 months EBITDA up to March 31st, 2022 of 278.7 million euro. As at December 31st, 2021, the cash and cash equivalents of Petronas Chemicals Group and its subsidiaries stood at 16.39 billion ringgit or 3.592 billion euro. The acquisition represented 64% of the cash and cash equivalent in financial year 2021. As commented by Petronas Chemicals Group in the 2022 annual report, the rationale behind Perstorp acquisition was to hedge against market volatility and cyclicality. However, if we scrutinize the summarized income statement from 2016 to 2021, the company did not generate attractive net income. The company generated the net income of 979 million Swedish krona in 2021, which was the best out of 5 years. The company either suffered losses or generated minimum income for the rest of the years. The acquisition cost was 10.5 billion ringgit or 2.3 billion euro. The investment could be futile. If we assume annualized EBITDA first half 2023 of the specialties segments entirely went to Perstorp, the EBITDA yield was only 2.52%. This is a very optimistic assumption given that there are other businesses in the specialties segment. In September 2019, Petronas Chemicals Berhad acquired another specialty company, Da Vinci Group, a leading independent producer and formulator of silicones, lube oil additives and chemicals at the purchase price of 163 million euro. However, the acquisition cost was revised to 233 million euro in 2023 due to the exceptional financial performance achieved in financial year 2022 and realized an EBITDA of 83 million euro as a result of lower raw material and inventory costs combined with strong market demand owing to supply chain disruption and geopolitical conflicts. The earn-out portion of the purchase consideration has increased by 70 million euro, resulting in the revised acquisition cost of 233 million euro. The acquisition is proven successful with the EBITDA yield of 35.6%. The payback period is around 3 years without taking consideration into taxes and debt portion. What is an earn-out? An earn-out is a contractual provision stating that the seller can receive additional compensation based on performance. For example, if the company hits a 1 million operating profit, the seller can receive additional 5% shareholding. If the company hits a 2 million operating profit, the seller can receive additional 10% shareholding. However, in first half 2023, the specialties division had an EBITDA margin of 3.78% and net loss of 193 million ringgit. If anyone is from Petronas Chemicals Berhad, can you answer that if there is a clawback clause? Clawback is a reverse earn-out clause. The seller needs to bear the risk if the performance cannot be achieved. For example, the buyer needs to refund the purchase price if the company incurs a loss of 2 million operating profit. The company is supported by strong infrastructure that result in lower costs and high production flexibility. One of the best examples is Penang Integrated Complex, which is ranked among the world best and is supported by associated facilities. The whole supply chain starts from feedstock to shipment. Saudi Aramco supplying 50% of the refinery crude feedstock requirement with the option of increasing to 70%. The refinery, which has a capacity of 300,000 barrels of crude per day, will produce a range of refined petroleum products and provide feedstock for the integrated petrochemical complex. With a nameplate capacity of 3.3 million tons per annum. The supporting facilities like the Penang cogeneration plant fueled by natural gas and provides high reliability of supply at relatively low generation costs, supplying up to 1,300 megawatts of electricity and 1,300 tons per hour of high-pressure steam to Penang integrated complex facilities with 700 megawatts of power exported to the national grid. Penang Deepwater Terminal 2 has a 1.5 million cubic meter storage capacity for petroleum products and a 200,000 cubic meter capacity for petrochemical. Pamir supply approximately 230 million liters of raw water to Penang Integrated Complex and an additional 30 million liters daily supplements to Johor State existing water supply for public consumption. Air separation unit at Penang Integrated Complex, which has two separate trains producing oxygen of 1,430 tons per day and nitrogen of 780 tons per day. Centralized utilities and facilities supplies water, natural gas, and critical service like industrial wastewater treatment, centralized maintenance and control, as well as analytical and product development, laboratory service for manufacturing process with Penang Integrated Complex. The RGTP, where the liquefied natural gas is received, stored and regas, is used to power Penang Integrated Complex cogeneration plant and also fed to the Peninsula Gas Utilization Pipeline to boost the availability of gas in the country. The regasification unit has a capacity of approximately 500 million standard cubic feet per day and is connected to the PGU via the 72 km Penang gas pipeline. Feedstock is critical to the company's success. Without it, company cannot survive and proceed with production. Therefore, Petronas Chemical Group commissioned a 3.5 km ethylene transfer line, enabling the increase of export volume of ethylene that has helped to optimize the production of ethylene at PC olefin, which allow ethylene crackers to receive its highest amount of ethane feedstock supply and translated into Petronas Chemical Group highest ethylene production volume. Feedstock costs carry the highest weight in the company cost of revenue. The 10 years average feedstock cost is 55% of the company total cost. Petroleum National Group is a major supplier of raw materials such as methane, ethane, propane, butane, and heavy naphtha, and at times the sole supplier. Petroleum National Group has been offering reliable supply and attractively priced feedstock to Petronas Chemical Group to ensure the sustainability of the business. For example, Petronas Chemical Group has renewed one of the ethane supply agreement within Petroleum National Group, and Petronas Chemical Group via its wholly owned subsidiary Petronas Chemical Marketing Labuan for further 20 years effective 1st October 2016. The key terms and conditions of this ethane supply agreement will maintain Petronas Chemical Group competitiveness against other players. Another ethane contract has been extended from 1st July 2023 on the same terms and conditions in the current contract for a minimum of 6 months. The long-term contracts signed between Petroleum National Group and Petronas Chemical Group ensure the fixed supply of feedstock for Petronas Chemical Group, but in some situations, they will cause negative impacts to Petronas Chemical Group. According to the company guide, Petronas Chemicals Group, written by Alliance DBS Research on 12 May 2020, it concluded that the oil price crash would lead to a negative impact on Petronas Chemical Group bottom line. At that time, WTI futures for United States crude oil dropped to negative $38 per barrel owing to COVID-19 and oversupply of oil. Petronas Chemical Group fixed ethane supply contract with Petronas offers Petronas Chemical Group a stable supply of ethane feedstock at a competitive price. However, it will not bode well for the company due to the steep fall in oil price. Most naphtha-based players will be able to enjoy improved margins. This is because the fall in naphtha price has exceeded the fall in overall product prices. On the other hand, Petronas Chemical Group will have to bear the cost of natural gas price determined before oil price crash. Petronas Chemicals Group revenue grew from 13.86 billion ringgit in 2016 to 28.95 billion ringgit in 2022 at a CAGR of 13.06%. Net income grew from 3.22 billion ringgit to 6.322 billion ringgit at a CAGR of 11.89% during the same period. Over the years, the quality of earnings is good as the company did not have working capital issue and able to generate cash flow from operations to spend money on capex. Thus, the company was still able to produce free cash flow. In the 7-year period, the company was able to generate free cash flow every year, on average 1.8 billion ringgit a year, except for the year 2022 due to acquisition of Perstorp that cost around 10 billion ringgit. Thus, in 2022, free cash flow was negative 4.939 billion ringgit. The company has no issue in repaying the loan since it is in a net cash position, around 6.2 billion ringgit net cash in first half 2023. The company can satisfy shareholders with its double-digit return on equity for most of the years, an average 13.86% return on equity for the 7-year period. The company recorded 5.24% return on equity in 2020 due to no net income of 1.586 billion ringgit on the back of COVID-19 and oil oversupply, leading to the crash in oil prices impacting the petrochemical industry. Petronas Chemicals Group targets a dividend payout of 50%. If you look at the historical data, every year the company had at least a payout ratio of 50%. On average, the company paid 53% of its earnings per share to the shareholder in the forms of dividend. If you purchase a stock at the closing price of 7.06 ringgit on 4th of January 2016, and the 5 years average dividend yield will be 5.25% in 2016 and increased to 8.17% in 2022. The CAGR of 5-year average dividend was 8.96%. 5-year average dividend was growing from 19 cents in 2016 to 32 cents in 2022, which is more attractive compared to Malaysian inflation rate of around 3 to 4% a year. The reason why dividend yield is increasing is due to the company 5-year average earnings per share growing at the 7.66% per annum. Moving forward, Petronas Chemicals Group has different projects in the pipeline. First, building Asia's largest advanced chemical that will use plastic energy patented technology to convert end-of-life plastics into pyrolysis oil, which can be used for the creation of recycled plastic, targeted to be operational by first half of 2026. Second, acquire the 113 kilotons per annum mine anhydride that will broaden Petronas integrated group product portfolio and its derivative. Petronas Chemical Group will upgrade and rejuvenate the facilities to produce refined maleic anhydride, targeted to be ready by second half of 2025. Third, building melamine plant with a capacity of 60,000 tons per annum. Petronas Chemical Group will be the sole melamine producer in Southeast Asia, targeted to be operational in 2024. Fourth, an expansion of the 2-ethylhexanoic acid plant that will increase capacity from 30,000 to 60,000 metric tons by 2024. Fifth, commission Perstorp Group investment in Penang plant in Sayakha, India by the second quarter of 2023. That is for Petronas Chemicals Group today. If anyone is interested in learning stock analysis, please contact me by my email. My email is in the description. I passed CFA program in 2 years and achieved a distinction for my master's degree in finance, investment, and risk from University of Kent.